In this video, I'll share some tips and advice on using the ATR percent stop loss calculator indicator that I released on TradingView. First up, for those that are new to the channel, my voice is hoarse because I recently had surgery and lost my voice during that surgery, but it's slowly coming back. So let's jump in. I'll talk about this indicator. I'll talk about what all these numbers are. I'll provide some tips and advice on using this indicator. The first thing I'll cover is to get this indicator. It used to be protected, but I just released a public version, but you can't find it by searching right now. So follow the link in the description of this video. But I anticipate here, as we move forward here in the next week and more people view it and like it, you'll be able to search for average true range, and it should show up within these indicators. It's just not showing up right now. So to add this indicator to your chart, go to the link down in the description, like it, and then it'll actually show up like this here. And then you can like it, you can add it to your actual favorites. And if you could just give a thumbs up if you like this as well, and then that will help it actually show up in the search better. Now, this is fully explained here in the description. So if you want more of a text overview of the thinking behind this and what's here, you can definitely read the description. I share what all the values are here as well. So let's go back to the chart. So what this indicator will help you do is two things it will do. It will help you get a good feeling of the range of the instrument that you're trading, and I'll go through all these numbers. The other thing that it will do is it will provide you two numbers that you will typically use for stop loss placement. So another thing that I find extremely helpful, but it's kind of annoying to have this open, is on TradingView they have this tab here called the data window. And this data window is really great for indicators like this, where because it doesn't have labels on this actual indicator right here where we're at, so there's no labels here, so you just kind of have to know that this second to last number here is the average true range. Well, over here, when we're looking at the data window, it shows that the first one is the 3-day, and it actually shows you what the true numbers are. I wish these indicators here allowed you to put a little label here. That would be really cool. So the first thing that I'll go through is that these numbers here, these numbers that we see here, they are, the first number is the 3-day ATR, so that is the average true range over the last 3 days. The next one is the 7-day, the next one is the 30-day, the next one is the 90-day, and the next one is the 1-day. Now, the number that most people want to know is the next number, which is the average ATR. So this 4.7%, that is the average true range that over these time periods. So basically that's the average true range over 90 periods, but it's not quite that because it's weighted a little bit differently. But that's the way to look at it. And that's the actual third number, the red number here is the average true range. So this is the actual raw number. Now, for stop losses, what I've found is a good rule of thumb is for most traders and most trading, especially on the daily time frame, using an average true range times 1.5 is going to give you the best results to make sure that you're doing trades that is within the range of allowing that instrument to move and to provide enough movement that your trade isn't completely invalidated. Meaning that, and that's this number here. So the second to last number here, which is the stop loss, this is the recommended stop loss, is the ATR times 1.5. And if we actually pull up a long position tool. So here's one trick about this indicator is that first up, this is a general rule of thumb in trading. You should wait for the candle to close because right now, since I'm all the way here to the right of the chart, the ATR is 7.1. I can't move that. So you can look over here. See, it says 7.1. But this daily candle has not closed yet. So that's not a true accurate number that you'd want to use in trading unless you're real close to the end of the trading day. So I want to actually highlight the previous candle and see that that number is actually 7.4. That's the real ATR that I would want to use in my trading because that's the last closed candle. This is a general good rule of thumb that that I would suggest you use in trading, is that you wait for candles to close for confirmation. That's as I've grown as a trader, it's been a rule that I've followed, and it's really a good rule to kind of make sure that you're always looking at what is the closed data, not what is the current open data, because that skews the current data that you're looking at. So since we're looking at the last closed candle, that means 7.4. What we can do is we can put our stop loss at 7.4, and I'm just going to approximate it because I'm not going to be able to get it close here. So let's just say 7.25 is about the best I'm going to get. So this is basically, if we go through and we look at the long tool, we will see here that if we enter a position here with an average true range stop loss times 1.5, that puts us at right just above this candle open, just above the weekly open. So the way to look at that is that unless you have a good reason to enter this trade, is there other support and resistance areas? Is there other reasons why you think the market would find support within that true range stop loss area? This is how you'd be using this indicator. Now we do have, and if you saw my previous video, you see here that there's a series of weekly highs right here, and there's a series of weekly opens right here that could be used as support. So that could be one argument that you could say entering a trade right now on EOS gives it enough room to find support at multiple. And this is just using simple support and resistance, simple levels, pivot points for the argument to say that I'm giving the trade enough room to breathe for it to be invalidated, for it to move up. This is obviously a long position. So this stop loss has a couple key levels, a couple highs, and a couple opens that it could find support on before it hits my stop loss. Now the other thing is that the day already has rejected these highs. If I scroll in here just to make it a little easier to see, this day right here that we're currently in has already rejected these actual lows. If I use this horizontal ray here, it's already rejected a lot of these. Well, it hasn't rejected exactly, but it's right around these ranges, these highs, and it's really used these closing prices as support. So that's a good sign for actual your stop loss placement. Another thing is, if we look at this closing candle, the third to last number, which is the ATR number here of 4.7, I bet that probably is the move if we actually move this up here. No, it's not. So 4.7, if you were to use the average true range, this is where you'd put your stop loss, which would be, if we look at this here, let's say, and I just moved here. So what I've done here is I said, okay, instead of using the stop loss, which is the calculation, which is the average true range times 1.5, we're just going to use the ATR. So we're going to use the ATR calculated averaged, and we're going to use that as our stop loss. And you'll see here, that puts us right where the last rejection was for this day. So that's still at a key level that if that breaks, we would say that our trade might be invalidated. So that's how you would use this. I mean, that's the short version of how you would use this indicator. The other thing that I would provide tips on is I typically don't plot all these because it's really hard to read. What I do is I go to the options here, and I typically turn off maybe the 7-day, the 30-day, the 90-day, the 1 day, and then the move left, because I don't really care about that. And then sometimes I'll just keep these on, if I even keep these on. And this gives me kind of a graph so I can see the ATR movement and how it's behaved. And it sometimes gives me a feel of volatility in the market. The other thing that you can do that's very helpful, that I do on a lot of my charts, is I don't plot any of these. And then this saves a lot of real estate, because all I care about is the number. All I care about is, as I graph over this number right here, the ATR for this period that I was looking at was 13%. If I were to go to this period here, the stop loss was 13%. The ATR was 9.2. But let's go to something else. Let's go to TRX. Let's do the same thing. Okay, let's say that we want to enter a position in TRX right now. So if we go to the previous candle, we see that the previous candle says that the recommended stop loss on a 1.5 calculation is 9.3. Now, if we look at the current candle, it's actually saying 10.3. So it's actually increasing. Now, price action has currently rejected this weekly open. That's why, if you haven't watched my previous video on the YouTube channel, that's why I say have this weekly OHLC indicator. You need to have this on your chart in conjunction with what I'm showing you here, because it can't be more clear than right here. Look at this. This rejection, that would have been a decent scalp trade if you were able to be up and scalp it, of 5%, just trading off the rejection on this previous week open. Now, there's obviously support and resistance you could play in there as well, but if we go to the 15-minute, I bet we will see price action at that level. So let's go here. And I know I'm hijacking my video, but look, if we draw a horizontal ray here, we see a clear rejection there at that week open. So you would have had to been really quick to be able to pick up on that spike. You would already had to have a limit order to pick up that spike, but you could have potentially picked up this second pulse up. Or maybe even right now, if you believe there's still strength and it's going to retest this week's open. So it looks like it might be testing this week's open right now. So I know I just hijacked my own video here. So let's go back to the daily time frame. And let's do auto. And let's say that, okay, we looked at the 15-minute. We see this strong rejection. And we think that this is a good trade. So we're going to go to the previous candle, and the previous candle says that the ATR is 6.2 and the recommended stop loss is 9.39. So we'll go to the long tool and we'll say we're going to enter a position, and let's see where 9.39 puts us. So 9.39 puts us, and I'll use the horizontal ray. It puts us at a key level that's already been rejected here, which has been rejected today. I don't anticipate. I wouldn't be surprised if there's a follow through red candle on TRX the next day, but it could actually turn around and be a green candle. But I wouldn't be surprised if it's be slowing down, and then you would see just a little bit of a slowdown and a reversal. That could potentially happen. But what do we see here? Well, we have one range here that's already been tested, that's been rejected. So you could say that's a positive. Now, the negative for this trade right now is that there's no other weekly levels within the ATR recommended stop loss. There is a rejection here on this candle here, if I scroll in. So there's a rejection here, right here on this candle, but then price shot right through that and actually had another weekly open. There's a couple rejections here down below, but that's so close to this week open that's already been rejected, you really can't count that in your favor. So this is where this would be a questionable trade based on just using the actual numbers of the market, just using the actual number of the 9.3 ATR 1.5 stop loss, I would, based on what I see here, I would wait for an entry down here, somewhere down here. At least I'd probably wait for an entry down here. So a retracement a little bit more, potentially. This could all change, but because here's the thing. When you're trading, why I feel that people need to have, especially new traders, one of the things that, what I'm trying to say is that indicators, sometimes they graph things for you. And this is an important point. Indicators graph things for you. And oftentimes I've found it helpful that you actually know the real numbers or the percentages at a glance that something is moved, has moved, or especially a percentage move, because then you have a different perspective. It's a number. It's not visual. Oftentimes, visual things trick the mind. We see patterns in visual things, but when you see a number, you still see patterns. But numbers are, in air quotes, science, but they're hard and concrete. So seeing a number and relating that number not to a graph, but what the number is, and seeing it and how it relates to other numbers, oftentimes gives you a new perspective or a different perspective on the market. And I'm going to switch over to another chart here just to give you another example of this. So this is a Forex chart that I use for trading. And I find, and you could do this with Satoshi numbers in the crypto market. So in Forex, I have a couple indicators that you see here. This one here is the same type of thing, only instead of using a percentage, it's using pips. And it tells me, okay, like here today, or the last day, that the average true range is 58 pips. And then the stop loss recommendation is 1.5 of that, which is 87. So those are numbers that are good to know because they're raw numbers. You can see I don't have them graphed. Now down below this are other numbers that are helpful as well. If I go to the information, the data window, these numbers are pips away from the weekly open, the last week open, the day open, the 200 moving average. I find, and I don't want to confuse you, so if this is confusing, I apologize. I'll get back to the crypto market. I find having these raw numbers, not graphed. So if I just turn off these graphs here, not graphed, gives me a different perspective on the market, helps me think about the market in some raw numbers form, which you should always try to get back to. Relying on indicators and the visual nature of the market sometimes can trick you. That's why you always want to try to get back to some raw numbers, because in the end, capital protection, which is risk management, which is what we're talking about with this indicator, the ATR indicator. It's risk management is about math. It's about protecting your capital. It's about making smart trades and making smart trades with what the market tells you and thinking in probabilities. So for instance, if the market has said that the average true range that's averaged over the last 90 days is 6 to 7%, and that moves 12% to the downside, something has changed in that asset. So that's why when you're using these numbers, you're really talking about probabilities. What's the probability, or I'm within the probability that if it moves 10.3%, most likely my trade is invalidated. Or if I enter a position here and there's not enough reasons for me to believe that there's going to be support within the marketplace by buyers within that stop loss area, why should I take the trade right now? Maybe I should be patient. So let's go to one more chart. So here we are looking at WAN, WAN chain, BTC on the 1-day time frame. This popped up on a scanner recently. And, ordinarily I would have been trading this as a scalp back in before I changed my trading style. Now I think why it popped up on the scanner is, as we see, it is approaching. Notice how this previous day rejected the weekly open, it did close below, but it closed above the weekly open, closed above the weekly open. Now it's right at this week open. You could say that this is based on the velocity of this move. I could almost say that this is maybe trying to find a bottom right here, especially that it's stopping within this candle right here. But let's look at our ATR stop loss. So our ATR stop loss on the last candle says that it's 11.7%. Now it's above the weekly open. If we look at this overall chart, unless this is WAN right now, let's go to the monthly. Jeez. Not to discourage you from taking this trade, but unless you have a really good reason that WAN has some upside, the market has really said that since May of 18, there is no value in WAN, at least at this current rate. So maybe it has found a bottom. So maybe this is a trade that we might want to take for a long term. So maybe we have done some analysis on WAN. So let's look at this and let's look at this trade, because there's really no levels here to use. Let's use the long tool. We'll say that we're going to enter a trade here, and the ATR is 11%. That puts us well within these previous ranges here. So if this is a reversal trade, so I wouldn't say this is the best trade in the world, but this is definitely, if it gets to this point, you could say that your trade has been invalidated. Let me pause the video. I'm going to try to see one that actually is a good example, just because I don't want to end the video with these examples that aren't the greatest examples for how I think that this can inform your decision, because obviously this is within a couple key levels of support just on the weekly time frames. We're not talking about lower time frame actual support and resistance, but this stop loss is within those range, or does allow for those to kick in for support. But let me see if I can find a chart that gives you an optimal way that I would say that the stop loss calculation gives you a couple key pivot points and levels that make it a good trade. Let's see if I can find one. So I'm going to pause the video. Actually, I didn't have to go far, because I think ARN is a okay example. I would have liked to see a actual close above this week, but this fits something that potentially I could say it's finding support in this. So there's a value range here of trading here that it looks like it's finding support. There's a lot of weekly opens. Now it's traded below those weekly opens, but there's a lot of weekly opens, a lot of weekly highs, a lot of weekly lows. So if we look at the ATR of the previous day, and it looks like it might be trying to close above the week. So it might be looking to try to have a week like this and maybe do a continue on, especially if BTC is kind of rised a little bit. And if it stays in this range where it's rised a little bit, that would allow some of the alts to maybe move. So we're looking at 11% right here, 11.8%, so about 12%. And we're going to say we enter here. Let's see where 11% is. So that's a good, this to me it's close. That's why the best entry probably would have been down here in the middle of the week here. But what do we have here that makes this kind of a trade where you can look at it and say, well, there's a lot of, just off the weekly levels and just what we can see on the chart here, just visually, there's a lot of key things that, and what I'll show here. So this week, these weekly opens, it's used right now as resistance, meaning that, or support, I should say. So it's bounced off that, and it's bounced off that yesterday and today, if I scroll in a little bit. So yesterday and today. And it's got a series of weekly opens that right here is the lowest weekly open that it previously moved from. Ideally, on this trade, I would have liked to enter right here with this, because you can see here this recommended stop loss is well below the previous week or this week low where it actually moved from, and the open where it actually moved from. So that would have been the best entry. So obviously, but here we could reason, well, that maybe we expand our stop loss just a little bit, another 3 or 4%. If this is a longer term position, we think ARN has I guess it's Arion, but ARN has a potential to move from here. And maybe it's a longer term position, because if it retraces back 1.5 ATR, our trade's been invalidated. Most likely, it's going to just do a decline like it did here. Most likely. Now, there are times where it'll find support and then bounce back, but stop loss is really capital protection. Setting a stop loss and setting a stop loss based on the range of the market is really about protecting your capital. So, I guess I don't have much else to add on this indicator. These numbers can be helpful as well. These other numbers, I will share some of those tips as well. So if you do memorize what these numbers are to know that this is the 3-day, the 7-day, the 30-day, and the 90-day, I find that sometimes understanding maybe what the difference between the 30-day and the 3-day can give you an idea of maybe a change in volatility. And then obviously the 90-day is a 90-day period ATR. So this can just give you an idea of maybe some of the change in volatility, but there's other better volatility indicators out there that I think you can use above the ATR. I do think that this is definitely one other thing I'll go through. So this last calculation, what this is that this is the actual move, the percentage move left in the day based on the average true range. And I'll go through this here just so it's very clear. So it's the difference between the prime stop loss and the 1-day period move. So basically what that is basically saying, and this is an experimental number, is saying that there's a potential that there's a 6% move left in the day. Now, this isn't completely accurate because it's 1800 UTC. That means that it's got to move that much in the remainder of the day. It's a Sunday evening in the US, so maybe the Asian market gets up and maybe does get excited and moves at 6%, which does put it right around this week close here. So this number I want to make more intelligent as we move forward, but basically that's a calculation saying that based on the ATR of the recommended stop loss and the ATR calculation, here's a potential percentage move left. I haven't forward tested or back tested that. That's why it's an experimental number. But what I want to build in this is I want to build a calculation that looks at the ATR and shares a reliable ATR move that projects out ATR of the next candle. That's what I want to build with this indicator. It's going to take a lot more math and a lot more tweaking and everything else, but that's kind of the indicator I want to get to. So that's why that number's here. That's why that move left number is here. So that's all. This is a pretty longer video than I anticipated. Hopefully I shared some tips and advice. Definitely, if you haven't joined on Discord, find the link down below. If you're interested in learning how to trade in the crypto market and create a system that gives you an edge so that you can reliably and pull capital from the market, join Discord. You can DM me on how to get started with the training. It's foundational training. I look forward to seeing you in the next video.